Okay, guys, welcome back. What I want to do today is it's Sunday, and I wanted to look at the larger markets, the larger indexes, and the larger sectors today. So we're going to start off by looking at the ES, the NQ, and the YM. So if you don't know what that is, this is basically the ES. This is the S&P 500 futures, the ES ticker. The NQ is the Nasdaq futures, Nasdaq 100 futures, not the Nasdaq Composite, the Nasdaq 100, and then the Y/YM is the Dow Jones Industrial Futures. So, we had a really interesting week of trading or of the market movement. Recently, you'll see that the market put in a high, and then it sold off the next few days. So this is Friday. So on Wednesday, it puts in a new high, and then it sells off. So if you go back and you watch my previous video, I did mention that based upon this candle, it was likely that price would continue to move down lower over the course of the week, and that's exactly what it did. Now, the thing that we need to evaluate, however, is the quality and the characteristic of the selling, and we need to gauge how strong it is. So if you look at this candle here, you see large volume, 1.7 contracts traded, 1.7 million. The next day we have 1.57 million, and the next day we have 1.6 million. So the thing that you need to keep in mind here is that what does the quality of the selling look like? And the quality is poor. Why is it poor? Because look at all the volume. There's all this volume, and you're telling me price only closes down a difference of, what is this? $3. So price moves $3 on the same number of shares that it did when it moved down, and opened at 37.07 and it closed at 36.59. So after 45 points here, a 45 point difference here on 1.74 million shares, the next day it goes to 1.5 million and it closes down $4. So this is really poor quality selling, and it's actually being bought up, right? So notice the large buying tails here. This is basically saying that price got all the way down here, and then buyers came in, and they liked the price and they bid it up, and then the same thing happened here. Sellers pushed the price down here, buyers liked it at this price, and they pushed it up higher, and they continued to bid up the price. So when we see this, we can say that the quality of the selling is very poor, that it's likely that if there is additional selling, it'll be weak, and this is Sunday night, so futures have opened, and you'll see that price has already gapped up, most likely from, I guess you could call this vaccine optimism here. So prices picked up a little bit. And if there is selling, the selling should continue to be weak here. This is sellers trying and failing here 2 days in a row. So we should see how the price responds when the buyers should step in next week. So really right now, the burden or the onus is on the buyers to prove that they really have the strength here to continue to move prices higher. First attacking 37.14 to see if they can break through the high of this candle, and then continuing higher to, really if 37.14 breaks as resistance, then, we're really looking at potentially 3,800 on the S&P futures and the index. So overall, the line of least resistance is still up. Just looking at the market, the broad, behavior of the market, it looks like the line of least resistance is still up. So let's go to the NQ. Now, looking at the NQ, again, we're seeing a very similar pattern here. The bracket here is very similar to the one that we saw on the S&P. And we're actually seeing that here is where sellers make their last-ditch effort to push prices down lower, and they fail as the prices go up the next few days. It forms a slightly small, a range here before it pushes up over this resistance level here that stopped these two advances before it finally broke above this high here, and then it ran up with poor quality buying before selling off. So this is when I pointed out the fact that on this day the NQ dropped more than the S&P and the Dow Jones, that the market leader, the Nasdaq 100, actually sold off very, very badly and showed great weakness here. But the thing to point out again, and this is probably due to the contract change, I don't know why the volume is so low there, but again on the next day there's no follow through, and again on the next day there's still no follow through. So on Thursday, no follow through, Friday, no follow through, and we're seeing the same kind of behavior, most likely from vaccine optimism, with the prices gapping up Sunday night with the futures open, and most likely not most likely, but the burden is on the buyers this coming week to see how high they can take prices, exploring back up to 12,675 to see what that quality, what the buying quality looks like. So let's go to the Dow Jones. Now the Dow Jones, when I look at the Dow Jones, it looks pretty good. It looks pretty good. Buyers take it up all the way up here. Sellers try to take it down. Test of the range successful. Good quality buying. Good spread candles here. Here we'll look at it over here. Good spread candles here, serving as firm rejection of that level. Price moves down. Again, very poor quality on the selling side. Buying, the quality doesn't look good either, but neither does the selling. So we're in this kind of indecision bracketing zone. So this really goes both ways. But I would expect to see buyers stepping in here. There is still the potential, of course, that the buyers don't materialize. You see a half-hearted rally to 37.14. It fails and prices plummet back down to 3,500. That's still a scenario, but based on the current evidence, I would expect prices to go higher. That's just what I'm seeing right now. Okay, so why don't we look at some of the major sectors here to get a pulse of the overall market. So this here is the communications sector. So it's very important to look at all the sectors at least once a week, get a gauge on how they've been trading, because they do make up the overall markets, and you want to see how the laggards are doing and you want to see how the leaders are doing. So that's one of the things that I like to look at, is when the leaders start to slow down and the laggards start to pick up. That's something to pay attention to, and that's something that, as the market continues to move up into higher highs and to break into new territory, something that I'm looking very closely at. But I'm really letting that tell me where the market wants to go in the future. So if we look at communications, touches off the top of the bracket, hits the low, attempts to rally up, gets stopped in the mid-range, back down, and now it's gone back up to the bracket high, to the bracket extreme. It's pushed up over it, sold off, and now it's holding in the middle. So again, this is pretty good, and if you're long, I can't see any reason to go short here, not just yet, until you see some more weakness coming through. Plus, we are in a bull market, so I wouldn't really short anything unless you're dead certain and you're playing with very, very, very tight stops and take profits. So, okay, the XLP here, again, very much of the same kind of story, bouncing off between a bracket beautifully. I mean, this is just textbook, bracketing. Good money to be made here if you're shorting at the tops and going long at the bottom, and closing out, you're short, going long, closing out, going short, closing out, going long, and so so obviously you can't really go, because, the bracket has been broken here, right? So you would expect it to hold up here a few days before selling back down, but instead it's gone up and over a retest of the level, and it's traded above this $66 level for a few days now, for a few weeks really. So, you can't really go short here just yet. It's really indecision here. So there is some indecision, and that's what it looks like we're picking up on here. A lot of, actually, as we look at these other sectors now, consumer discretionary here, a lot of indecision here. Nothing really bullish, nothing really bearish that stands out to me, but obviously I hope you guys are now seeing the pattern with the ES and the NQ here, which is where prices went up, they tried to sell down, and we expect to see prices go up, and a lot of the times what really happens is price, goes up, it does a retest, maybe it stays at this level for a little bit, it forms a spring here, forms another spring, and it just needs to shake out some additional buyers here before it moves up higher. So, this is indecision, but it's not really like, bad selling. So, obviously we are at the top of the bracket. This is where a breakout could occur, or where another push, going back the opposite side of the bracket could occur. So, right now my kind of expectation is that least resistance is in the up. It will take way too much firepower to move this thing back down to 140. Not saying it couldn't happen, but right now I'm definitely more in favor. I'm definitely still bullish. So energy, right? Energy has been, and this is something that you want to pay attention to. And I'll explain this in a later video of the concepts behind it. But when you look at a stock that has been doing relatively poorly all year long since the pandemic lows, and I mean poorly is relative because it did go from 22 all the way up to 46 here, so it did double in value. But then it enters a very long, but then from there, it forms an early peak here, and then it just sells off continuously all the way up until about last month. So you have this stock here that has been continuously grinding lower and now has hit a almost parabolic rally. So it's spiked up tremendously. It's gone from 27 to 41, so it's gone up $14. So over 50% here. So, this is essentially money coming in here, money that, could be coming out of other areas, including tech. So, the rotation play right out of tech into energy could definitely be a thing, so let's talk about that more when we look at tech, XLK. But let's look at financials now. Again, financials was never really a laggard. It was never really, super strong, but it was never super weak. It's been, middle of the road. Still has yet to reclaim its pre-COVID highs. If you look at a lot of these other sectors, though, they've already surpassed, consumer. Well, this is Amazon here, consumer discretionary here, and when you look at consumer staples, it's also gone above its pre-COVID highs. You look at communications, Facebook and Disney absolutely blown through the pre-COVID highs. And, you look at, let me see, where were we? Financials, and then you go and you look back at energy. Energy still has a ways to go before it reclaims its pre-COVID highs at $62, right? So at $62, that's where it was pre-COVID. Now it's at 41, so it still needs to go up by another 50%, right? So this is all things being equal, on balance, this is a weaker stock because it has yet to reclaim its pre-COVID high, right? So it's starting to run up now, and the obvious place where you're going to look for it to travel to is $46. And if it doesn't have the energy there, it'll just come back down and stay depressed at this level for God knows how long, right? So this, I'm not a really big kind of chart pattern guy, but this looks like supply has overwhelmed the market. It's called like a rounding over kind of formation here, and now we're seeing this buying coming in here. So this could indicate that there is some interest here, and that there is value or there is money rotating out of tech. But let's keep going. Okay, so anyway, we were at XLF, right? So XLF, still has some room to climb before its pre-COVID highs. Not a whole lot. It's just $3 off. So it's getting there. It's picked up recently in the last few weeks. So again, this could be good evidence that, value is rotating out of tech and into, these not older, but more, these other, more beaten down sectors, these laggards. Okay, XLV, healthcare. Healthcare's kind of interesting. It's been bracketing for a while before it pushed down, to the $100 level before rejecting back up and staying now above 109. So, it looks okay here. Not the strongest one, but not the weakest one. It looks like the healthcare sector looks like it likes to bracket for a long time before it starts to break out. So you can see, actually, this is kind of interesting, that there's this mid-range here, and prices, kind of tried to go up to the mid-range, fell down, recovered, back up to the opposite extreme, back down to the mid-range. And so it's playing around the top and the bottom of the mid-range as a support and resistance level. So it looks like it likes to bracket for a while. It bracketed here for about 2 months. It brackets here, small tight range for about a month, and then it forms this wider bracket for another 2 months or so. So it's finally broken out here, very aggressive. When you see this type of aggressive, gapping up kind of power, that's good. You want to see that. Sellers did try to take prices lower, but were unable to. Buyers tried to take prices higher, sold down, but the next day, again, higher prices. So, this is very good. This is very aggressive. This means that a lot of people like the stock during, pre-market hours, you know, extended trading hours, and pushed it all the way up to here. They liked it so much again the next day they pushed it up to here. So there's a lot of demand here for this, in the healthcare sector. We should see that play out in continuously higher prices. So now let's look at the industrials. So the industrials, you know, reminds me a lot of the financials because it has been a middle of the road performer, but just recently it is now starting to run up over its pre-COVID highs at $90 now. It formed a high at 90. So, you know, very good, strong sector now. You know, seems to have hit its head on around $90. So, don't really see this thing going down. You know, right now I would not look at stocks in a kind of negative manner. I would not look at them until I see more selling, or until I see a lot more sectors holding at levels without upward progress, or with upward progress, or very slow, sluggish upward progress. Okay, again, you know, basic materials, really fascinating look. Actually, it's gone up. You know, very strong. I think a lot of people don't really pay attention to the basic materials. You know, they're just not some of the meme stocks, right? That, you know, Tesla and NEO and all those stocks. It's not really in the news a lot, basic materials, but it's done very, very well, as you can see, from a low of 37 to a high of 72. You know, again, the same kind of formation. A lot of these sectors, by the way, the reason why you can't really be too bearish right now is a lot of these sectors look like they're trying to break out. And that's just something to keep in mind here as to whether or not, you know, we're going to see a next leg down. So this can be, when you look at this type of price action, this is essentially price consolidating and holding for a bit. And if there's enough demand, it'll push prices even higher. If not, you'll bracket here and you'll probably retest down to here, fail, or, you know, bounce off in a very sluggish rally before continuing back down. So, you know, right now there is that scenario, but still, I'm not weighting it too heavily. Real estate, you know, real estate has been bracketing since about what, June. So for 6 months, it's been bracketing. Hasn't gone over its pre-COVID highs. What does that tell you? It tells you there's a lot of other better opportunities out there. Now, real estate is one of the things where people like to buy real estate stocks like American Tower, Crown Castle, because they pay a dividend. You know, so that's okay, but you do want to be careful, because when a stock brackets too long without really showing strength, if it doesn't go up after 6 months, then, you know, how much more time does it need? So this one, you know, I wouldn't really invest in real estate stocks unless they are truly strong and they buck this trend here. You know, if the real estate stock has gone above its pre-COVID highs, then, you know, that's a different case. But looking at the overall sector is weak here, and I say weak because most other sectors have gone above their pre-COVID highs except for energy and real estate. So these are your laggards, right? Your laggards are real estate and energy. Technology. Okay, so here's the thing. If based on what we saw about the value play, you know, about how money is moving out of tech and into these more, you know, I guess, established sectors of industrials, of energy, of financials, you know, I think there's some grain of truth to it. I wouldn't say that that's 100% accurate, or that it's 100% the case, because we're not seeing, I am not seeing, you know, a rolling over action. I'm not seeing tremendous supply coming into the technology sector. I will give you the fact that it is weakening. So I think there's some truth to it, but that doesn't mean that the tech sector is, you know, finished running just yet. You know, there's really no saying where it'll stop running. The one thing that is interesting, however, is that if you look at a lot of the other sectors, they've all pushed up over their highs, right? They've all bracketed, and then they've all blown out of the bracket, right? So here, bracketed, blown out of it. You know, financials was the weaker laggard, energy is the laggard. So here, you know, consumer discretionary, it's gone above the bracket and it's holding above. You know, same with these stocks. But technology though has yet to penetrate this high. I would not call this extremely weak. It's not super weak, but it is something to keep in mind here that it's unable to go back to 127 before selling off. So, I personally think that there might be some sub money rotating out of this sector. But if you look at how it sold down to here to 109, back up 110, 109 again. Now it's formed a higher low at this range, right? It's formed a higher low here. Sellers were unable to push it back down to 109. So there is some strength left in this stock, in this sector. There is some demand left in here that has prevented sellers from making additional progress on the downside back to the 110 area. So with that in mind, let's look at the quality of this buying here. The quality of the buying does seem to be a little poor. The buying comes in very heavily, and then the buying is unable to make additional progress and actually results in net lower prices. So, definitely not quite as strong as they used to be. I'm still inclined to believe, though, to reason, and a lot of this indicates to me that the line of least resistance is still up. So, not really going to go to cash on this, not really going to go short. I'm still in a few technology stocks that I don't really have any inclination of selling out or closing out of my position. So, yeah, overall, on the broad markets, as we look at them from week to week, right now, overall, the line of least resistance is still up. A lot of people will say, that it goes up till it goes down. So it's true. It's very cliche. I think that's kind of a dumb saying, but that's just what happens. What's going on right now? As you look at the market going up higher here in this area, a lot of people are worried that we're in uncharted territory. A lot of people are getting nervous that the market might be getting too hot. Other people are saying that, well, we're due for a Santa Claus rally into December. Don't listen to any of that stuff. Just look at the chart and let it tell you where it wants to go. When you look at how the markets have traded in over a longer time frame, right? You'll see that we push into uncharted territory all the time. All the time we are going into uncharted territory. We're making new highs, right? Just like here, January 2018, we're making a new high before it sells off kind of in a very ugly manner. But then the market recovers after a few months, goes on to make a new high. Looks kind of scary, but the market continues to recover. So there are signs to look for. There are signs that you should be on guard for as you see the supply kind of overwhelming the demand. And I'll probably make another video about that in the future, about how supply, things to look forward when supply overcomes demand. But right now you want to see much heavier selling, right? This is really interesting actually, because you could see that here. I mean, this is a good question of whether or not we're going to see something like this happen, right? Where the buying is steady, climbing the wall of worry. It goes up, it just grinds higher every single day. You're starting to see some supply coming into the market here, a little bit of supply, more supply, but it looks weak, right? Like, this is the really interesting thing about stocks, is that the supply here looks really weak. The rally doesn't really seem to go anywhere. This looks like it's good because there's a lot of stopping power to the selling buy. Look at the buying tail, right? It just gets bought up every single day, and then this, probably some form of news or in one shape or another before prices go down. You look at the rally here. A slightly lower volume on these two candles, and then on this candle, a large spurt of volume. And all the buyers that are willing to buy have bought, and there's no more buyers at this level, so the price travels down, right? So this is something that is kind of like always in the back of your head, right? Like, looking at these kinds of candles, you would expect that, the selling should be dying off, it should be slowing down, it's approaching a good support level here at 28.70. You think, it should be okay, but then this day, just comes and just, drills down continuously all day and probably limit down, right? So that's always in the back of your mind, but, until you see that, you can't change your assumptions. You got to understand that based on your analysis. You stick with your analysis until you see something, change. So with all that being said, I'm still bullish on the market, and when I say bullish, I mean the line release resistance is still up. So yep, that's it.